Welcome back to Infinity Wealth, Dr. Marttand Patel. In this video, I'm going to talk about how coronavirus has potentially affected the overall future of both property and the economy. So, is coronavirus going to affect the market overall? The simple answer is yes, as you all probably know. But what you may not know is how it's going to affect you. First of all, let's look at certain aspects. So Airbnb have already been reducing. So what you're going to find is that there's going to be less travel around the world because of the coronavirus, even after the coronavirus has been beaten, and it will be beaten once a vaccine has been produced. You will find that the movement of people is going to be limited. So Airbnb clients are already looking at maybe doing a normal standard buy-to-let. They've been dramatically affected by the coronavirus. Hotels, the hotel industry, the whole of the travel industry has been affected. The other thing is rent-to-rents. So if you look at rent-to-rents, obviously with a rent-to-rent with a guaranteed rent, you know, if you're trying to find clients at the moment, it will be difficult. It will be difficult because you can't show them the property. Best way to do this is to do it via video. So ask your people in the house to take a video of the house, and then you can also upload that video to potential clients who are looking to rent that room from you. It'll also affect us in a different way, because in HMOs, obviously people are quite confined into their rooms, so they'll be looking at, you know, maybe taking bigger rooms, in the future. So that is one effect that's going to happen as well. More and more people are going to be working from home. It's a simple matter of fact. Now, what you tend to find in these dramatic situations is that it affects us over the longer term, not just in the short term, but over the longer term. So what you found is that more and more people are working from home. So therefore, office space and commercial properties are going to be affected over the longer period of time, where companies now have managed to actually carry on functioning even with their staff working from home. So more and more people are going to be working from home. Although it's nice to have colleagues around you and working around you, that will still affect the overall demand of the commercial property market, especially office spaces. So you may find that some companies will need shorter, smaller office spaces than they would have required before. The other aspect of this is with commercial property, which is down on its knees. I've spoken to a lot of my friends, which is why I didn't do the video straight away. I wanted to find out how and what experiences people are having in the commercial market. A lot of my colleagues and a lot of my friends, what they're finding is that where they've got commercial properties, they're not paying the rent, or they've asked for a rent reduction. Now, this will carry on. It's not just after COVID. What they will do is they will try to reevaluate their rents based on the losses that they've already made. So potentially commercial property going forward, and this is not for an end all, it's maybe looking at the next 2-year horizon or a year horizon, where commercial rents will be lower because people are not willing to necessarily take up the office space, or having smaller offices, and understanding that, you know, at the end of the day, the landlord is probably happier as long as everything is met, just to ride out this particular moment in time. And that's what a lot of people are doing. They're trying to ride out this particular moment in time, making sure they're staying solvent, making sure that they're keeping their clients happy as well. So the next thing is construction. If you look at construction all around London, we're not far from London, construction has ground to a halt. What that means is that, again, estate agents are not doing any viewings, buyers have been told not to purchase any properties, and all purchases have been put on hold. Now, those purchases have been put on hold, but what it means is that there is more and more stock available. With the coronavirus, people are less likely to go to other countries to invest at this moment in time. That's not to say that in 3 years' time or 2 years' time, that won't change. at this moment in time. So I'm looking at a year horizon to 2 year horizon. So you're going to find in London a lot of these buildings that are now completing or have completed or in construction. They're going to find it hard to find buyers. So they're going to force down prices, asset prices around London. The other thing that's always obviously been quite difficult in London is international buyers will obviously stay away, not necessarily buy more and more properties. So that's something to be aware of if you're looking to purchase. One thing that I have noticed with a lot of these Facebook pages and these groups, they are still very, very bullish. Now, I've lived through 3 recessions now. I know the time to be bullish is when most people are extremely negative. At the moment, people are still not extremely negative. Everyone is hoping that it will improve. It may well improve if we find a vaccine. Now, the other side of that argument is obviously interest rates have been reduced dramatically, which will make things more affordable. But you've got to understand people's mindset. People's mindset will be still. It will take quite a long time for people to come out of this coronavirus type mindset and start investing in properties and looking at properties. So there are going to be far better opportunities arising in maybe 2 months' time, 4 months' time, 6 months' time. Now is not the time to rush in, but to actually retrench, look at your portfolio, help to understand where your portfolio has got holes in it, try and plug those holes, and to actually pay down debt. Now, talking about debt, the other thing that you'll find is that if you're finding, you're trying to remortgage a property, most valuers are not going out to do valuations. So if they are not going out to do valuations, construction, if you've got a bridging loan where you require things to be signed off in order for the loan to be released, that can't be done at this moment in time. So it is a case of trying to understand where the situation is and working around those problems and finding solutions to those problems. So that's one thing. With mortgages, if you are refinancing your mortgage at the moment, mortgage rates have dropped. They have, lenders are giving out better rates, but it may be better for you to actually stick to the same lender and do a fixed term, maybe for 2 years, maybe for 3 years, rather than trying to shop around. If you are trying to shop around, and this goes for people who are immediately, are in the next month or in the next few weeks, who are trying to refinance. It's better to see if your current mortgage lender has a product for you which may be better, because then you'll move up to the variable rate, and their variable rate will invariably be higher than their current rate that they're offering on a fixed term. So just be mindful of that, and be mindful of what's happening around in the environment around you. The other thing is obviously transportation. Transportation is going to be important. Less and less people are traveling. If you've got a rented property and you're looking for people to, maybe a tradesman to come round, an electrician or a plumber, so you've got a problem in that HMO or in that buy-to-let, the simple solution is to write an email to your tenants saying, I understand that you've got a problem. I'm trying to resolve it. I have a tradesman who's willing to come and do the work, but can you make sure that you're not in the house, that you vacate the house and maybe go for a walk, give him a time frame, tell the tradesman to actually appear on that particular time, giving him the key. The tenant has now left the building, so there's no close contact. The tradesman can do their work. Once they've left the building, you can then text the people to actually come back into the building. Get the tradesman to also take a wipe and a disinfectant to wipe down any of the handles that they may have touched, to alleviate any of the concerns that your tenants may have. Looking at the economy, there is no question that the economy will slow, and there is no question that we will go into a recession. How deep that recession is going to be, no one really knows. If you look around you right now, wherever you are, everything is ground to a halt. Now, we're all hoping that halt will only be for maybe 2 weeks, 3 weeks, but it could be longer. This coronavirus could well come back in the winter months, or come back at a later date. So we have to be mindful of that. Until a vaccine is being produced, we don't really know what the overall outcome will be, but the economy will slow down. If the economy slows down, house prices will also come down in response to that as well. Also, Brexit. You know, we looked at Brexit and how Brexit is going to affect the property market. We've still got Brexit looming over all the other problems that we're having. That Boris bounce has now gone, especially in London. So it is a case of, if you're in the process of trying to buy a property, be mindful of the mindset that these prices, asset prices, will come down. So it's not overpaying for asset prices, but understanding, okay, asset prices will come down. Maybe I should buy my time to pick up better deals later on down the line. And down the line, I mean 6 months, 8 months down the line, until all this slows down. No one is going to rush out to buy property. No one is going to. They're going to let the dust settle down, and what you'll find is that you'll have some distressed sellers, like landlords, who are coming onto the market, who may have not been able to meet their mortgage demands, and maybe having to force to sell. At the end of the day, with the construction slowing down, the positive side is that we're building less houses. We haven't built enough houses anyway, but that's not to say that we will just shoot up in house prices and assets. We at the moment are very much indebted. The government is printing money like no tomorrow to support industries, especially transportation, like airlines and things like that. There will be bailouts for other industries. If you look at banks today, banks have announced that they will not be paying a dividend. There will also be a freeze on payments as well. Just think about it, guys. If people's wages are frozen because their companies are not being able to produce a decent enough profit, they should just be happy in having a job. So if they're happy and their wages have been frozen, it means that they're less able to spend on purchasing a property. So property prices will naturally sink to a lower level. Now, I have been, like I say, I have been to a lot of forums where people are still very bullish. I'm talking about real world experience and the experiences that I've had from the last 3 recessions, and what I have seen for myself, and when is the best time to actually enter if you're looking to enter into the property market. Now is the time to preserve some cash, to build up a little war chest, which will enable you to actually pick up the better deals when they come along. So I hope you found this video informative. Please don't forget to subscribe to our channel. In the link below, you'll see links to our channel and where to subscribe as well. Please pass on this video to other people who you think will be find it extremely useful. But I look forward to hearing from you. I'll be doing another video next week as the market progresses to see what is going on. Okay, take care for now, guys. I hope you found it informative. Speak to you soon. Bye.